Hello and welcome. 3 years have passed since the goods and service tax, or GST as it is known, has entered our lives and made our lives perhaps, I don't know, it might be happy or miserable depending on which way you look at it, depending on whether you're a small business, a large business, a professional, an independent professional, and so on. But let's use this occasion to understand what is GST, or revisit what is the definition of GST, what did it replace, and how has life changed since then, and what can we perhaps expect in coming days. To discuss this, I'm joined by Ritesh Kanodia, partner at Indirect Tax, which typically looks at such taxes at Dhruva Advisors. Ritesh, thank you very much for joining us.
Yeah. Hi everyone.
Ritesh, so first question, tell us what is GST and what did it replace 3 years ago?
So GST basically is a transaction tax. Now, if you would remember, before GST got implemented, we had multiple taxes in place. So for example, there are transactions in terms of sale of goods. There are transactions which are in terms of sale of services, provision of services, you may call it as. And when you talk about a sale of goods, there were two taxes which were applicable. So one was manufacture, which is excise duty applicable on production or manufacture. And then there was a tax on sale, which is VAT. Now, when you provide services, there was something called as a service tax. So all these, and I will add on to the other indirect taxes which got subsumed, but just to speak about fundamentally three important taxes. All the three levies, namely excise duty, VAT and service tax, were three different levies on the same transaction of goods or services. So for example, if I manufacture the goods, first I have to pay excise duty. Then when I sell the goods, I have to pay VAT. So, what used to happen was all these taxes were not fungible against each other. So when I say fungible, means an excise duty which was paid on the manufacture of goods was not creditable against the sales tax or the VAT that you may pay on sale of the goods. And then you had an additional element of services, and sometimes there was also this dispute of whether a transaction is goods or services, and therefore whether you will pay VAT or you pay service tax. Again, these two taxes were completely different domain, one central government, one state government, and again not fungible, so one cannot be set off against other. So this basically led to an increase in the overall transaction cost in the supply chain, because when you talk about, let's say, a dealer, a person who is in the business of selling goods, so he will buy the goods, he will pay VAT on the purchase of goods. There would be an excise duty which had been charged by manufacturer. Then he will also incur transportation cost on which there will be a service tax. He might incur loading unloading cost on which there might be a service tax. And then ultimately he will sell those goods. So the set off of those service taxes, excise duty would not be available to him, which used to become a cost. What GST has done is it has sort of merged all these taxes into one goods and service tax, which effectively means that when you buy, you will pay a GST. When you sell, you will pay a GST. So in that manner, the fungibility aspect has completely been enhanced. The entire regime has become more robust, because now you can, once you pay one particular type of tax, the only tax that you pay in procurement is the same type of tax, and you can take credit. Just one last point which I want to add is GST is not only subsumed excise duty, VAT or service tax, it has also subsumed taxes like entry tax, octroi, entertainment tax, luxury tax. All these were, so entry tax was levied on entry of goods. Again, used to become a cost in the entire transaction. Octroi, you must be aware, right? It is also into the entry of a state. Similarly, there was entertainment tax, there was luxury. All these used to get cumulated and become cost in the entire supply chain, which got merged now into a GST tax.
Right. So now we have one GST which is also working across the country for all products and services. Would that be correct, Ritesh?
Yes, absolutely right, except for certain products which have been intentionally left out. So for example, petroleum products are currently out of GST, which there is a debate to bring it in, and obviously it would take its own time because it's a very big revenue earner for the states. But yes, fundamentally, mostly all products are now into the GST rate, except for certain specified products where still your VAT is applicable. So.
Right. And I'll come to how it works as an individual or as a small enterprise or a large enterprise. But tell us about the rates. What are the key GST rates and where do they apply?
So you have four rates currently. So the four principal rates, which are 0%, 12%, 18% and 28%. These are the key rates. And then, amongst these rates, you would have exemptions, concessions, which would be available. So depending upon the criticality of a product or a service, the government may have granted exemptions. In addition to the above, there are certain sectors on which compensation cess is levied. So let's say, for example, automobiles, where the basic GST rate could be 28%, but let's say depending upon the length of the car, you could have an additional compensation cess of up to, let's say, 15%. So your rate becomes 43%. So while the principal rates are 4, the entire rate structure is fairly distorted in terms of exemptions, concessions, compensation cess. So you can call it as a multi-rate structure as opposed to a 4-rate structure.
And that's because when you think of GST conceptually, and maybe when we look at other countries, you're really thinking of one rate for everything across the country.
See, there have been.
So that's not happened. Right. No. So now let's talk about how it affects me, or as an individual, either who is earning a profession, a revenue from profession, or from my business, or when I'm buying or selling an item. How does the money move, or how does this particular tax move?
So, as I've already explained that, what has happened is that when you look at a life cycle of a transaction, so let's say as an individual, and let me give you an example of a car. So I go out into the market and buy a car when which a GST would be chargeable to me. What used to happen earlier? The car, let's say, used to get manufactured by a manufacturer. The manufacturer would have paid excise duty of, at that point in time, the excise duty was around 10%, 12%, depending upon the product involved. He would then send the car to a dealer and he would also pay a VAT. Now VAT again could be in the range of 12%, 14%. And then the dealer would then sell the car to me as an end customer. Now in this entire supply chain, you had, as I said, excise duty, VAT, octroi, entry tax, RTO tax, all of those. So RTO tax is still there, by the way. So all of these taxes used to be levied, and then I used to buy the car. Now what happens is when I buy the car, there is only one GST which is applicable. I use the car for my own consumption. So that is one aspect of my procurement. So wherever you now buy a product, you can clearly see what is the totality of the taxes. Because when I used to buy earlier, I used to see only VAT on my invoice, sales tax on my invoice, and excise duty, you would never see it on the invoice as an end consumer. Now I can see that, okay, the product is 12%, 28%, etc. I could clearly see it on the face of the invoice, and I have to pay that particular tax. In effect, as an end user, honestly speaking, there has been no substantial rate in the change in the rate of tax. So if you talk about a 12% or an 18%, what the government has tried to do is they have tried to achieve a revenue neutral rate. Now, when I say revenue neutral rate means the combination of excise plus VAT was there in the pre-GST regime. They had tried to keep it and retain it under the GST regime. So if something was liable in the VAT regime at 5%, and let's say excise was 12%, you would find that product at 17%. That's the philosophy on which the entire structure has been built.
Right. Two more questions. One is, in a lot of small businesses have something called a setoff. So you say that I have GST credit, and I can use that to set off when I make a purchase and I pay someone else GST. Explain to us what that means.
So primarily setoff means that, when I am a business person and I'm providing certain supplies which are taxable. So let's say I am into the business of trading and I'm selling stationery. I'm just giving you an example. Now, when I sell the stationery, I would buy the stationery from the market. Now, the person from whom I'm buying is also liable to pay GST. So there is a threshold exemption of 20 lakh, assuming, so below 20 lakh, he doesn't have to pay GST. If he's about 20 lakh, he will register and he'll pay GST. So he will sell it to me, let's say at rupees 100, and he will charge me a GST of, let's say stationery is liable at 12%. So he will charge me 112. I add a 20 rupees margin, I sell it at 120. So 120 into 12 rupees, which is 24 rupees, I will pay as GST on the output when I sell the product in the market. When I sell it at 24 rupees, I will take a set off of whatever GST was charged to me by the purchaser. So I will deduct the GST which I have paid on the purchase, and then I will pay the net GST in cash to the government. So this entire mechanism is by way of a procedure which is required to be followed. So I have to file my input return, and when I say file my input return means there is a consolidated return. I have to claim that set off, and then I have to file my output return showing that I have netted off that set off against my output tax. So this is how you typically, and see, when you talk about sale of product on payment of GST, you not only talk about purchases, you also talk about expenses. So I have taken a shop on which I'm paying rent. Correct. I would have, let's say, consultants who may be doing my audit. So when I take a set off, I will take off GST charged on all such expenses, which earlier was the issue for a trader. A trader couldn't have taken set off of services against VAT. Now everything is GST. So I can take a set off of rent, I can take a set off of my consultant cost, everything. So basically it ensures that nothing becomes a cost in the supply chain. There is just one.
Correct. Yes, go ahead.
Yeah, sorry. One critical aspect which I wanted to highlight over here is this entire set of mechanism which you have mentioned works like a bank. So there are mechanism to which it says that, let's say, the supplier has paid GST on the supplies made to you. If the supplier doesn't file his returns and doesn't show that invoice in his returns, it will not get reflected in my ledger. So there is a credit ledger. And if it doesn't get reflected in my ledger, credit ledger, the question is whether I can take that set off. That is a huge debatable position. Like in a bank, I deposit a check, the check gets cleared, and then only I can see that amount in my bank account. Similarly, the government is trying to bring in a system whereby only if the supplier deposits the GST and it gets reflected in your credit ledger, it is only where you can take the credit. That has been one of the most contentious issues for the entire fraternity, and that is where small traders are really facing huge amount of problems.
Right, and it because it affects our cash flow, and that's a critical
Absolutely.
thing as well. And that's a different debate. Let me stick to my the questions on getting an explanation, sure. Ritesh. So the other question is, earlier you had sales tax and you had central excise. So obviously money was going to states and money was going to center because each entity needed funds to run administration and so on. How does it work today?
So in the earlier regime, there was this concept of origin-based taxation. So when I say origin-based taxation means, let's say I am in Maharashtra and I am selling the goods from Maharashtra and I will file the returns in Maharashtra and I manufacture goods in Maharashtra. So the entire revenue was going to the Maharashtra government. Now what is happening is it has now got changed into a consumption-based tax. So when I say consumption-based tax means now I am in Maharashtra. Let us say my customer is in Gujarat. Okay. So when I sell the goods, so there are two types of taxes primarily. So a central goods and services tax, a state goods and services tax. And then there is something called as the integrated goods and services tax. So integrated goods and services tax is primarily for transactions which are between two states. So as far as, because now both center and states have got the power. Earlier, center was charging excise duty, state was getting state VAT revenue, which is sales tax. And the center was again getting service tax revenue. Now everything is liable to both by center and state under GST. So how it will work is there is a C portion which is CGST, which will go to the central government. There is a S portion which is SGST, which will go to the state government. That is if you sell the goods within the state. If you sell the goods outside the state, there will be an integrated tax, which would be total of CGST plus SGST. So to give you a quick example, if I am charging professional services invoice on you and your address is in Maharashtra, you are the recipient, I will charge you, let's say 9%, 18% is my GST. So 9% CGST, 9% SGST. So the 9% SGST portion will go to the state government, 9% will go to the central government. If it is an integrated tax, then again, I will charge you total 18%. Now, out of that 18%, the central government will give the share of revenue of the state government to the state government, depending upon where the services have got consumed. So in this example, Maharashtra to Gujarat, services have got consumed in Gujarat. I as a taxpayer, a supplier, have to report online that for this invoice, this is my place of supply, which is Gujarat. And accordingly, the revenue will go to Gujarat. This is how primarily the system would work.
Right. Ritesh, last question. So what is the one thing that, and only one, I know there could be many, that you think can be improved, made more efficient or smoother 3 years later?
See, I think the largest issue that the taxpayer is paying is the entire credit matching piece. There has been a discussion around simplified returns, which were going to be implemented. And the entire philosophy of this simplified returns is that once a taxpayer, the vendor pays the tax, it is only where the customer or the buyer will get credit. Now, this is a big pain point because, how do you control vendors? How you control suppliers? Tomorrow, if somebody charges you GST and doesn't deposit it to the government, what control you as a recipient would have to reach out to him, or what? So what happens is, what the government says is, okay, he has not paid the tax, so now you reverse your credit. I think that is one of the key issues that needs to be addressed. Government needs to, and there are litigations and disputes over it. So we don't know how this is going to be resolved, because government is very clear that unless he doesn't pay the tax, I will not give you credit.
Okay, so let me supplement that with another question, Ritesh. So 3 years down the line, is it a success, yes or no?
I don't think so. Anybody can answer that. GST is clearly a success. There is no debate around it, because you just ask somebody who has dealt with the pain of dealing with excise, VAT, and service tax. It's a new law. Yes, it would take its own time, but nobody sort of thought that it would take 3 years. It's taken longer than expected to settle down. What we need to really hope for is that there are certain key elements which needs to be put in place, like the entire return filing mechanism. When we started with it, the entire system was in a mess. GST used to break down and returns were not used to be filed. Now that has got sort of settled down.
Resolved, yes.
Yes. The government is implementing simplified returns. The government is, bringing mechanisms to check tax evasion. Now, once all of this, the problem is that you would want guidance and clarifications, which are very often. Now, what we have seen is that is not forthcoming. There are a lot of issues which are still open issues. So it is clearly a good tax, because the pain of handling 3 taxes, 4 taxes, 5 taxes was quite large. Clearly a good tax. I think the challenge is implementation, and it should have by now got settled down, but it is not. Again, the structure which India has adopted is multi-state GST, multi-rate GST. All of this is bound to create complication. You said one tax, right? So have let's say a 12% tax, one collecting authority, one enforcing authority, one implementation authority. We are not seeing that anytime soon. So if 30 states are going to, you have offices in 30 states, and if 30 states are going to come to you to question where is my tax, would you call it as simple tax? No, on implementation, not on the law. So the challenge is implementation, not the law.
Right. Ritesh, it's 3 years, and as you say, we've come a long way in 3 years. Let's hope that in the next 1 year, even as we recover from the shocks of COVID, we are able to streamline some of these problems. Yes, one cannot but forget the famous octroi nakas outside cities like Mumbai, and the pain that one had to go through. But that's gone. So hopefully many of these problems will be resolved as well. Ritesh Kanodia, thank you for joining us.
Thank you very much.